Hey everyone, and welcome back to the channel. Today we're diving deep into a fascinating trend that has got everyone talking. While cryptocurrencies seem to be taking a nosedive, gold and silver are soaring to new heights. What's really going on here? Is this the end of the crypto dream and a return to old school assets? Let's break it down. First up, let's talk about the biggest driver, risk-off sentiment. The world is a pretty uncertain place right now, isn't it? We've got geopolitical tensions simmering, persistent inflation worries, and questions about the future of global economic growth. In times like these, investors naturally get a bit nervous. They start looking for safety, for something tangible and reliable. This is where gold and silver have historically shown. They are the ultimate safe haven assets. For thousands of years, they've been a store of value when currencies and empires falter. So what we're seeing is a classic flight to safety. Money is flowing out of what the market perceives as high risk, speculative assets like mini cryptocurrencies, and into the warm, comforting embrace of precious metals. Think of it like this. When a storm is brewing, you look for solid shelter, not a high-tech tent that might blow away. Right now, for many investors, gold and silver are that solid shelter. But it's not just about fear. There's a major liquidity and credit squeeze happening, and it's hitting the digital asset world particularly hard. For the past couple of years, central banks around the globe have been hiking interest rates to combat inflation. This makes borrowing money more expensive. For the crypto ecosystem, which has thrived on easy money and low interest rates, this is a huge problem. Many crypto projects and companies hold significant portions of their treasuries in digital assets. When the value of those assets falls and the cost of borrowing goes up, it creates a brutal double whammy. They have less collateral, and it costs more to fund their operations. This pressure forces them to sell off their crypto holdings to raise cash, which in turn pushes prices down even further. It's a vicious cycle. Precious metals, on the other hand, don't face this kind of pressure. They don't have corporate treasuries that need to be funded or complex financial engineering propping them up. They just sit there, being valuable. This difference in their fundamental structure is a key reason for the divergence we're witnessing. Now, let's zoom in on the supply side, especially for silver. This is where things get really interesting. Silver isn't just a monetary metal, it's also a critical industrial component. It's in your phone, your solar panels, and your electric car. The demand from green energy and tech sectors is absolutely exploding. But here's the kicker, the supply is getting tighter. We've seen major silver-producing countries start to consider or even implement export restrictions to prioritize their own domestic industries. For example, reports about Mexico, one of the world's largest silver producers, potentially curbing exports have sent shockwaves through the market. When you have surging industrial demand meeting a tightening supply, the only way for the price to go is up. Gold has its own supply story, with central banks buying it up at a record pace, effectively taking huge amounts off the open market. This physical demand, both industrial for silver and institutional for gold, creates a very strong price floor that cryptocurrencies simply don't have. Crypto supply can be governed by code, but it's not constrained by the messy, real-world challenges of mining and geopolitics that affect metals. Finally, we need to understand the concept of market rotation. Capital never just disappears. It moves. Think of the global market as a giant pie. For the last several years, a huge slice of that pie was dedicated to speculative growth, tech stocks, and of course, cryptocurrencies. Fortunes were made, and it felt like the party would never end, but markets move in cycles. After a long period of speculation, capital naturally rotates into value and safety. We're in the middle of one of these great rotations right now. The money that was chasing 100x gains in obscure altcoins is now seeking to preserve its wealth in assets that have stood the test of time. It's a shift in mindset from get rich quick to stay rich. This isn't necessarily a permanent judgment on crypto's future. Instead, it's a reflection of the current economic climate. When the appetite for risk returns, we might see capital flow back into digital assets. But for now, the momentum is clearly with the old guards, gold and silver. They are reclaiming their role as the bedrock of a diversified portfolio in uncertain times. So to sum it all up, this isn't just a simple case of crypto bad, gold good. It's a complex interplay of global fear, tightening financial conditions, unique supply dynamics for precious metals, and a classic cyclical rotation of capital. The risk-off sentiment is pushing investors towards safety. The credit squeeze is putting immense pressure on the crypto ecosystem. Specific supply constraints are creating a price squeeze in silver, while central bank buying supports gold. And all of this is part of a broader market rotation from speculation to value. What does this mean for you? It's a powerful reminder of the importance of diversification. Having a foot in both worlds, the innovative, high-growth potential of digital assets and the stable, time-tested security of precious metals might just be the smartest way to navigate these turbulent markets. Understanding these deeper currents is key to making informed decisions rather than just reacting to scary headlines. What do you think is driving this trend? Are you team crypto, team gold, or both? Let me know your thoughts down in the comments. I read every single one. Thanks so much for watching. If you found this breakdown helpful, be sure to hit that like button and subscribe for more deep dives into the markets. I'll see you in the next video.